I wrote a article about this a long time ago called Life Insurance is Not a Financial Plan that I got a ton of heat for from the financial advisor community that I was like, bring it on. In reality, it's meant to be used as a tool just to close income gaps, like you just said, if and when something happens to you and there are people who rely on you financially. I want to start this by saying, though, I am not against permanent life insurance or whole life insurance or whatever other term can be used to explain it. There are some very specific cases where it just makes a ton of sense. And it is the best option for people who are sitting across from someone who is financially incentivized to sell them that insurance. However, there are a lot of other circumstances where it's being sold to people incorrectly and unethically. So like the whole idea of you and your family are going to be able to be your own bank, and you're going to buy this insurance and it's going to be family banking. I don't know how better to say it. That's the term that I keep hearing being used right now all over social media. And the concept of you can borrow against the policy and the cash value in it at any time to cover whatever thing your family needs to do. Well, if you just took those same dollars and invested them in a Vanguard index fund or SPY and bought the S&P 500 or whatever, they'd grow significantly more than the insurance premiums that are going into this policy that you can then borrow your own money against. And you can borrow against your investment portfolio using a securities-backed line of credit the exact same way. So where really is the advantage to anybody other than the institution that's selling the insurance?